Okay, so now that we know what an asset, a liability, and equity is, we want to know what a debit and a credit is. The important thing to know is a debit and a credit has absolutely no meaning in real life. It's like supercalifragilisticexpialidocious. The debit and credit we use here are not at all related to a debit card and a credit card. The banks just needed names for those, and they thought debit and credit sounded cool, so that's what they called it. Not at all related to what we mean by a debit and a credit in accounting. All it means is to increase an account, we either debit or credit it. So that's all it means, is the way we increase an account. So to increase an asset account, we debit it. The word debit spelled D-E-B-I-T, but we abbreviated DR just to drive accounting students nuts. I think really in the olden days it used to be debitor, but that was too long, so they made it debit. I still don't know why they didn't make it DE, but DR is the way we abbreviate a debit. All it means is if we debit an asset account, we are increasing the account. That means to increase liabilities and stockholders' equity, we're going to credit an account. So if we credit a liability, that means we increase it. The opposite then is true if we want to decrease an account. So to decrease an account, if I want to decrease an asset, I credit it. If I want to decrease a liability or stockholders' equity account, I debit it. And again, all it means is how we increase or decrease. One isn't good, one isn't bad. We increase an asset, we debit it. If we increase a liability, we credit it. So it gets kind of complicated, but really there's 4 different choices, and you really only have to remember one, and you can kind of work your way through the other choices. So I'm going to go back to increase. If you come up with a memory trick yourself, that usually is one you'll remember forever, so I encourage you to do that. But one you can use at least to get started is to make your car move forward. You put it in drive, which we abbreviate DR. A car is an asset, so to move an asset forward, to move an asset up, you debit it with the DR. So to increase an asset, you debit it. Once you know that, you can figure everything else out. So if I know to increase an asset, I debit it, and I know I need to increase a liability, I must have to credit it. Going the other way, again, I know to increase an asset, I debit it. So to decrease it, I must, hopefully you said, credit it. So come up with a way for you to remember it, and then just use it consistently, and you are golden. I'm going to go through just 2 quick little examples, and then you get to practice on your own. Let's say I want to buy equipment for $10,000 cash. I'm going to increase equipment. Equipment's an asset account. To increase an asset, you could cheat and look below, but hopefully you said debit. We need to decrease cash. Cash is an asset, so to decrease cash, you have to credit. So I'm going to debit the equipment for $10,000. That will increase equipment. I'm going to credit cash for $10,000, which will decrease my cash account. Second example, I'm going to buy that same equipment, but rather than giving cash, I'm going to sign a note payable. So I buy that equipment for $10,000, sign a $10,000 note payable, which is a loan, which is a liability. So I'm going to increase the equipment, get an asset account. To increase an asset, I debit, and increase the note payable, which is a liability. To increase a note payable, I credit. So I'm going to debit equipment to increase that for $10,000, and I'm going to credit the note payable to increase that, since it's a liability, for that same $10,000. So the magic of accounting. every transaction always has two parts. Basically, I give something and I get something. That's what makes a transaction. One will always be a debit, one will always be a credit, and it will miraculously or magically work out. Because of that, your accounting equation will always be balanced. Our assets will always equal our liabilities plus stockholders' equity. So if I get rid of an asset, I have to either add back another asset or also get rid of a liability. In those examples we had before, I had one where I added an asset and subtracted an asset, so the asset side stayed put. In the other one, I increased an asset, but I increased the liability. So again, my scales always stay balanced. That's really all there is to it. So let's go ahead and try it out. You start out, I give you some little hints, and then as you go through more exercises, those hints disappear. So see how you do. Good luck.